Okay. Good morning, everyone. Before we get started, may I please ask that everyone mute their microphones when they are not speaking. You should see a microphone icon on your video screen, which allows you to mute and unmute easily. I am the lead ALJ conducting the hearing today for this case. On this panel and on this video conference, we have Judges Andrew Wong and Wen Dang. We are the administrative law judges deciding this appeal. Because of ongoing concerns pertaining to the coronavirus, the Office of Tax Appeals has decided that it is in the public's best interest to move the hearings to a video conference calendar. We are holding these hearings via video conference with the agreement of both the taxpayers and the agency's representatives, and this change will not impact the fairness and objective hearings of the tax appeals. If you are unable to connect or are having technical difficulties, you may call in using the telephone number that was provided earlier. Thank you for your patience and flexibility during this time. This hearing is live streamed to the public, and the audio of this hearing will be transcribed at the hearing. As this hearing is being live streamed to the public, please do not show your exhibits on the screen. Additionally, please do not use the chat function within Webex. To minimize confusion during the hearing, we ask that participants mute their microphone. Please also repeat your name before speaking and avoid talking over other participants. If there are any questions during the process, including any questions regarding the technology, the questions should be directed during this call to me, the lead administrative law judge on this appeal. If you become disconnected, please contact Claudia Lopez. Before we go further, I'd like to note that the Office of Tax Appeals is an independent and neutral agency. It is not a tax court. All three judges are co-equal decision makers, and we can all ask questions at any time. Ms. Lynn Alonzo will be transcribing the hearing, so please identify yourself and speak clearly and slowly for her. With regard to exhibits, taxpayer has submitted no exhibits, and CDTFA has submitted exhibits A through C. At the September 2nd pre-hearing conference, there were no objections. I wanted to confirm with Mr. Guzman that that is still the case.
Your Honor, that is still the case.
Okay, great. And Mr. Guzman, there will be no additional evidence presented at the hearing, correct?
That would be correct, Your Honor. I just want to know that I'm sure the department has Form 836, which is the summary of the auditor jotting down the contingents. I wonder if I can refer to that. That's Form 836.
That is within the audit work papers, correct?
It should be in the audit work papers. Yeah, it's called Report of Discussion of Audit Findings. I just want to refer to this for a couple of paragraphs, that's all.
Are there any objections from CTFA? I believe that's within your exhibit.
There's no objections, Your Honor.
Okay. And CTFA, I just want to confirm that there are no additional exhibits from you today as well?
No additional exhibits, Your Honor. This is Randy Suazo.
Thank you. This is Judge Long again, and I wanted to confirm with Mr. Guzman that there will be no witnesses today?
That is correct, Your Honor.
Thank you. This is Judge Long, and CTFA, you also have no witnesses. Is that correct?
This is Randy Suazo. That is correct. No witnesses.
Okay. My understanding of the issues today is that there are two. They both involve unclaimed bad debt credits, and they are whether appellant is entitled to additional unclaimed bad debt credits measuring $62,419 based on the repossession of 16 vehicles, and whether appellant is entitled to additional unclaimed bad debt credits for reconditioning costs of the repossessed vehicles totaling $131,000. Is that, Mr. Guzman, is that your understanding of the issues here?
It is. When we had the pre-hearing, I went back and basically it's 121 vehicles, not 131, just for the correction record.
Okay. Thank you. I will have to ask you to confirm that when we go on the record in just a few minutes. And as we discussed, CDTFA, I want to confirm that that is your understanding of the issues as well?
Yes, Your Honor. This is Randy Suazo.
Thank you. This is Judge Long. As we discussed at the pre-hearing conference, the oral hearing will take approximately 1 hour. That includes 15 minutes for appellant's opening statement and presentation, 20 minutes for CDTFA's presentation, and 5 minutes at the end for appellant's rebuttal, as well as questions from the ALJ panel throughout. Do you have any final questions before we go on the record, Mr. Guzman?
Not at all, Your Honor. No.
And CDTFA, do you have any questions before we go on the record?
This is Randy Suazo. No questions, Your Honor.
Okay, thank you. And Judge Dang and Judge Wong, are you both ready? Okay. And Ms. Alonso, are you ready as well? Okay. We're now going on the record. This is the appeal of M. Farooqui, OTA case number 19034-564. It is Wednesday, September 23rd, 2020, approximately 10:10 a.m. The appeal was intended to be heard in Cerritos, California. I am lead administrative law judge Keith Long, and with me today are Judge Wen Dang, and Judge Andrew Wong. We will be hearing this matter this morning. I am the lead ALJ, meaning I will be conducting the proceedings, but my co-panelists and I are equal participants, and we will all be reviewing the evidence, asking questions, and reaching a determination in this case. Would the parties please state and spell your names and who you represent for the record, and we'll start with Mr. Guzman.
My name is Juan Guzman, CPA. I represent Morshadul Haq Farooqui, DBA Elite Motors.
And CDTFA?
Randy Suazo, hearing representative.
Jason Parker, hearing representative, spelled Jason, last name Parker.
Christopher Brooks, tax counsel. That's Brooks.
Thank you. And the issues on appeal are twofold. First, whether appellant is entitled to additional unclaimed bad debt credits measuring $62,419 based on the repossession of 16 vehicles, and whether appellant is entitled to additional unclaimed bad debt credits for reconditioning costs of the repossessed vehicles totaling $121,000. During this appeal, or prior to this hearing, appellant's briefs indicated that the reconditioning costs totaled $131,000. I would like Mr. Guzman to confirm that it is in fact $121,000 at this time.
$121,000 would be the correct amount.
Thank you. CDTFA has submitted exhibits A through C, which are admitted into evidence with no objections. We will begin with opening presentation from appellant. Mr. Guzman, you have up to 15 minutes, and you may begin whenever you're ready.
Ready, Your Honor. Basically, the audit had 4 items, and we're only focusing on the credit for bad debts, the total amount $472,049, and we feel that the allowable should be more than what's allowed in the audit. And specifically at the pre-hearing, I mentioned that we'd be addressing and focusing solely CDTFA letter dated June 21st, 2019. I'd like to read some parts of this letter as my position regarding the additional bad debt allowance. So hopefully everybody's on the same page.
Yes, thank you.
Everybody's on the same page?
Yes, go ahead.
Okay, so basically the items that I was contending, and it's true, the bullet that we have, the first one that says vehicles were sold at lower prices due to location of business. This is not the most ideal location. I met with the taxpayer, I met with the auditor at the premises. I don't know if the record shows this. We took pictures of the most damaged vehicles that we had there. There was quite a few vehicles, by the way. So this dealership does not attract the best credit-worthy persons. The types of vehicles that are sold, they're not selling, Cadillacs or Mercedes. These are low-income accessibility vehicles. But it appears to me that the average vehicles or number of vehicles repossessed during the audit period was like 1 per week. Is that drastic? But the point here is that, okay, the CDTFA has done a lot of work, and I understand the procedure. I understand how every item that they have noted. I understand that completely. I was in the trenches at one time, used to do the same calculations. However, look at that, not the last bullet, it says, where I say, the additional 193 claim bad debt allowance is calculated by the appellant as follows. Well, the department already allowed a certain number of these vehicles additional credit. We're missing 16. Why not use the body of work that has been done for the ones that were allowed and extend it to the 16 vehicles? I don't think that's totally unfair. I don't think it's totally unreasonable. It just makes a lot of sense, regardless of the method being used. If we just use the method, body of work that the state has done, extend that to the 16 vehicles. That's point number one. Point number two, as far as the additional $1,000, and we would all wonder, well, where's that $1,000 coming from? I mean, nobody's asked that question. That's what I was referring to, the BOE Form 8836A. That was dated back March 5th, 2015. And the auditor states the following. Although Mr. Farooqui agrees with the method of computing repossessed vehicles, he argues that he spent an average $1,000 per vehicle to have them reconditioned after repossession, and that this amount should be deducted from the wholesale price. That comes directly from the taxpayer. There's a comment in that same report, the same page on the bottom, and it says following from the auditor. It was not possible for auditor to determine which parts, we're talking about reconditioned parts, a purchase or body of work expense belongs to each vehicle. And that makes sense. It's very hard from an audit standpoint to do that. Such expenses are not only related to the repossessed cars, okay, so there are costs involving the repossessed cars that were not taken into consideration, but to cars bought on auctions and fixed to be resold at a higher price. And so the auditor did see that there were additional costs. However, those were not accounted for in determining the additional claimed, I guess, the bad debts. So that's where the $1,000 comes from. And basically, that's the only issues I have, and I just wanted to expand on that by reiterating what I had on the letter on June 21st and also indicating what we have on the BOE Form 836A dated March 5th, 2015. So all I'm asking, number one, is to extend the body of work to the average to the 16 vehicles missing based on the body of work that the state has performed. And the $1,000 per vehicle claimed by the taxpayer and the auditor saying, you know, there are additional costs, but we just couldn't calculate those. That would be my presentation, Your Honor. Everybody there? Hello?
This is Judge Long. I'm sorry, my microphone was muted. I didn't click the correct button. Thank you very much. I will now open the floor to questions from my panel. Judge Dang, do you have any questions for appellant?
Thank you, Judge Long. I do not have any questions at this time.
Judge Wong, do you have any questions?
This is Judge Wong. I also do not have any questions at this time. Thank you.
Mr. Guzman, my questions pertains to the calculation of the $131,000 reconditioning costs, and I believe that they've been answered at the beginning of this hearing as well as in your presentation. So we will move on to CTFA's presentation. CTFA, yes, for 20 minutes. You may begin whenever you're ready.
This is Randy Swazzle, Your Honor. The appellant operates a used car dealership in Victorville, California. The department performed a sales and use tax audit of the business for the period from January 1st, 2011 through June 30th, 2014. During the examination, the appellant provided a listing and calculation of unclaimed repossession losses for vehicles repossessed by the appellant during the audit period. Exhibit A, pages 56 to 58. The department performed a review and analysis of the repo losses, and using the pro rata method as described in Regulation 1642, Subdivision F, number 2, calculated an allowable amount of taxable bad debts for those repossessions. The department examined 137 separate transactions in connection with the bad debt loss claims. The department did not allow 16 of these transactions because the appellant did not present substantive documentation to support the repossession allowance. And another 5 transactions did not qualify because the net contract balance of the vehicle, which was less than the estimated wholesale cost of the vehicle. This means these transactions would have resulted in a gain of the appellant for the appellant, which would decrease the amount of bad debt loss. Exhibit A, pages 43 to 46, lines 11, 57, 82, 104, and 125. For the remaining 116 transactions which were allowed, the department recommends no further adjustment to the department's calculations of the repo loss. The net contract price for the 116 vehicles were based on the actual data for each vehicle for the appellant's own records. For instances where the original sales contract was not available, the department presumed the sales price received from the subsequent buyer of the vehicle was the net contract price. The computed repossession loss for each car was calculated using the contract price less the wholesale value. For 70 of the 116 vehicles, or 60% of the repossessions allowed, the department computed 2 separate wholesale costs and utilized the lower amount. This benefits the appellant. One method used third-party data from Kelley Blue Book, a known estimation tool for the car industry. Specific data regarding the estimated mileage, vehicle options, model, etc. were considered in calculations. The other method used as a reduction of the sales price for the appellant's average markup percentage. The other method used as a reduction of the sales price for the appellant's average markup percentage. The average markup of costs was computed using the appellant's year 2011-2012 federal income tax returns, gross profit, and cost of sales amounts. The average markup includes the cost of parts and other costs to repair the vehicles to a sellable condition. Exhibit A, pages 98 to 9. The department noted that for three vehicles, the Kelley Blue Book cost resulted in a lower cost amount. For 67 vehicles, the sales price reduced to the cost per markup resulted in a lower cost. Regarding the remaining 46 of 116 vehicles, or 40% of the repossessions allowed, the documentation on hand showed the vehicles were either a total loss or the vehicle was abandoned out of state. In these instances, the department used a wholesale cost of $0, which afforded the appellant with a bad debt loss equal to the taxable portion of the contract price. Despite the department's lenient determinations in this matter, the appellant continues to seek a bad debt allowances for the 16 transactions, even though he possesses none of the necessary documentation. The department rejects this proposal. Regulation 1642 states that when there is a repossession, a bad debt deduction is allowable only to the extent that the retailer sustains a net loss of gross receipts upon which tax has been paid. In support of the bad debt, retailers must maintain adequate and complete records. For the 16 vehicles, the appellant has not provided any certificates of repossession or other proof a loss was incurred by the appellant. Accordingly, no allowance should be given for these transactions. The appellant is also requesting an additional $1,000 be allowed as bad debt credit per vehicle to account for the cost of repairing vehicles to sellable condition after they have been repossessed. As previously stated, the calculation to determine a wholesale price uses the federal income tax returns cost of goods sold, which includes cost of parts and repairs to the vehicle. Exhibit A, pages 98 and 99. Therefore, if an expense to repair repossessed vehicles is required that is not specifically including the dealer jacket of the repossessed vehicle, any additional cost would be embedded in the price calculation and an arbitrary amount is not applicable. The appellant has failed to maintain and provide documentation to support adjustment to the audit findings. The appellant has not provided any detailed proof of additional costs to repair the vehicles or other documentation to support adjustments of the values calculated. The department amounts are reasonable and used available information, including third-party data. Therefore, the department requests that the appeal be denied. This concludes my presentation. I'm available to answer any questions you may have.
This is Judge Long. Thank you. I'll open the floor for questions to my panel. Judge Dang, do you have any questions?
This is Judge Dang speaking. I do have a brief question for Ctfa. I believe, Mr. Suazo, you had touched on this briefly already, but I'm wondering in situations where the department is calculating the wholesale value, say, for example, using the Kelly Blue Book values, would reconditioning costs already be built into that value? And so if we were to allow further reconditioning expenses, it would almost be as if we gave a double deduction for that.
For the Blue Book ones, there's only 3 of them that were generated that way. There were 67 that were done on the markup method, and 40 other ones that were done, or 40% of the other ones are using a zero cost. So you're only talking about 3 out of 116 cars. And assuming that you're looking at the Blue Book method, it would already have been discounted for whatever condition it happened to be in.
This is Judge Dang again. Thank you. Are there any other transactions where the reconditioning costs would have already been factored in?
The reconditioning cost would be factored in because you're using the cost of goods sold. That includes both the repair and the parts that were included when you're obtaining the markup percentage to apply it to.
And how many transactions was that for?
67, or I believe it was 67 transactions where the markup is computed in there. So it already has embedded the cost of repair and parts. On the other 40, again, those are valued down to 0. So there's nothing that you could do beyond that. And for the 3 with the Kelly Blue Book, the Kelly Blue Book would already factor in what condition it was already in.
I would like to, this is Jason Parker. I would like to add on the Kelly Blue Book, one of the transactions, they did have some documentation on some repairs of $2,700. So that the Kelly Blue Book value was $3,150, and the amount we used as the repossessed value was $450. So one of the 3 Blue Book transactions has already been adjusted.
Thank you. This is Judge Dang again. So would it be fair to say, in your opinion, that essentially for the transactions remaining, that reconditioning costs have already been factored into all of these transactions?
Yes, that would be fair to say.
Okay, thank you. I have no further questions.
Thank you. Judge Wong, do you have any questions?
This is Judge Wong. I had no questions. Thank you.
Thank you. I just want to follow up on the $2,700 repair that Mr. Parker brought up. Just to clarify, there were no other repairs that could be traced to the other 2 Kelly Blue Book valued vehicles that were repossessed. Is that correct?
Yes, from my understanding, it had some documentation showing an estimate from a body shop for $2,700. The other transactions with Kelly Blue Book, they did not have any repair parts or body shop estimates for those 2 other transactions where Kelly Blue Book was used.
Thank you. And Regarding Regulation 1642, which is controlling here, I wanted to clarify, was any evidence found or presented during the audit that the bad debts in question were either legally charged off as a bad debt for income tax purposes or in accordance with generally accepted accounting principles?
They were not charged off on the federal income tax returns, Your Honor.
Thank you. I do not have any further questions, so we will move along to a closing argument from Mr. Guzman. Mr. Guzman, you have 5 minutes. If you could please begin whenever you're ready.
Your Honor, maybe I missed it. I thought I had an opportunity to ask questions for the department. I had about 2 or 3. Can I enter that in my closing statement?
You can ask questions to me, and I can direct them to CDTFA. However, CDTFA is they are not testifying as witnesses, so they cannot be asked questions directly.
Okay, Your Honor. So basically, the presentation of the CTFA, I understand completely. It appears to me that more than half of the vehicles or the vehicles claimed or tested depend on the markup percentage. And the markup percentage they obtain from the income tax returns. The question number one is, what was that markup percentage? How does it compare to the industry? Number two, okay, how reliable are the income tax returns? Usually they're not very reliable. So again, was there anything in the record that indicated that the additional costs were in the cost of goods sold? I do not see, or at least I did not see ever, a breakdown of the repair costs into cost of goods sold. Those are the issues, and the point being here is that everything's based on an estimate. And the summary is that the first point is, why not use the body of work on the 16 remaining vehicles and come up with an average that's already used in the audit? I think that would be fair and reasonable to the taxpayer. As far as the additional costs, I believe those costs are not broken down on the income tax return. I have no idea where those costs came from. The taxpayer is the main person that's going into work every day. These people don't work just your 8 hours. These people work 16. They have to go find cars. They have to pay rent. They have to take care of all these other things. But he's the one that's actually buying these items. He's the one that's actually reconditioning these items. He may not have the most perfect tax or record only because he dedicates 99.9% to making a living, trying to survive. He has a family of 5. It's tough out there. And so I'm relying heavily on the taxpayer. I'm relying heavily on the fact that we met at the taxpayer premises, and I saw a lot of wreckage. I saw a lot of vehicles were not saleable and required a lot of cost. So again, my point is that if we're using an estimate, which is the markup in this case, and those costs are not broken down on the income tax return, I cannot see why we can say that they already included. That's my closing, Your Honor.
Thank you. I believe that CDTFA covered many of those questions in their presentation regarding the wholesale cost of the vehicle. Did CDTFA have anything to add regarding where the wholesale costs came from?
Basically, it's purchases plus other costs included in the cost of goods sold. So that would include repair and parts, Your Honor. It was, I think, if you looked at the 2 years, they averaged $84,000 a year in repair and parts. It's part of the other cost of goods sold. It's part of it's listed as other costs and cost of goods sold for 2011, $75,473 of other costs, and in 2012, $91,820. So it averages to $84,000 a year. And that's included, those costs are included with the purchases of the vehicle, less the inventory, to get the cost of goods sold that's claimed on the federal income tax returns.
Okay, thank you. And before we conclude, does the panel have any final questions? Judge Dang?
Mr. Judge Dang, I do not have any questions. Thank you.
Judge Wong?
This is Judge Wong. I had one question for Mr. Guzman. For the 16 vehicles that CDTFA did not allow a bad debt loss for, did you have any, they indicated they didn't do that because of lack of repossession documents. Does your client have any repossession documents with regards to those 16 vehicles?
Does not have the best of records. However, the 137, when you think about 137 vehicles, where does that number come from? I think that department came up with that number. And we only were allowed, what was it? We're just allowed the 16 vehicles.
So, Mr. Guzman, the answer to my question was your client does not have the best records.
He's not the best, unfortunately, Your Honor.
Okay, thank you. Also, with regard to you were asking for $1,000 reconditioning costs per vehicle. Do you have any documents to support that figure?
Well, like I mentioned in my opening statement, that Form 836, the auditor said it was not possible for auditor to determine which parts purchase or bodywork expense belongs to each vehicle. Such expenses are not related to repossessed car, but to other cars. So, and they did the markup method, so that kind of explains to me that the auditor did not allow those expenses because he couldn't do it. But now we're talking about a markup. So that's where I came up with the additional costs and why I came up with the reasoning that there is no costs that were allowed in the computation, only because from the auditor's comment that I read here.
Thank you, Mr. Guzman. No further questions.
This is Judge Long. Thank you, everyone. Mr. Guzman, before we conclude, we have your evidence and the information that you provided today. Is there anything else that you've prepared or that you would like to tell us before we conclude the case?
Not all, Your Honor. Thank you.
This is Judge Long. Thank you. This concludes the hearing. The judges will meet and decide the case based on the documents and testimony presented and admitted as evidence today. We will send both parties our written decision no later than 100 days from today. Thank you for your participation. The case is now submitted and the record is closed. The hearing is now adjourned. Thank you.